the average price of a house in Britain today is more than £9,900. This price is 60% higher than it was 18 months ago. And the source of money to buy houses is drying up. Today, mortgages cost more than ever before. This week, Sir Hubert Newton, chairman of the Leek and Westbourne Building Society, forecast a mortgage interest rate of 14%.
I pray to God the government will realise the seriousness of the situation in which many young people, particularly home buyers for the first time, are finding it today, because they're queues a mile long waiting at building society offices in order that their mortgage demands can be met.
Sir Hubert Newton making that now notorious threat of 14% interest on house mortgages, and thereby exposing what is now a crisis not only for house buyers but for the government as well. Tomorrow the building societies are to meet the government to demand action, and we ask a building society chairman, the ex-Chancellor of the Exchequer Reginald Maudling, and the Shadow Minister of the Environment, Anthony Crosland, what, if anything, can be done. But first, what's been happening to make the cost of mortgages rise higher than ever before? Take the case of the ordinary saver who wants to invest some money. His obvious choice normally would be the building society. There, at the beginning of last year, he would have been paid the equivalent of 7.75% interest on his money before tax. If he had chosen instead to put it in the bank on deposit, he'd have got only 2.5%. Obviously much less than at the building society. The situation now, though, is quite different. It's the foreign investors, huge companies and rich states who are the key to the problem. They want to put their money where it's safe and where it'll earn the highest rate of interest rates, but interest rates everywhere have been spiralling upwards. So in order to keep and attract foreign investment, the government decided that British interest rates would have to go up to keep in line with the rest of the world. The result is that down in the high street, the banks now offer 9.5% interest to their customers, 5% more than at the beginning of last year. But to keep and attract their funds, the building societies too have put up their rates. But now they only have a minute lead over the banks. Their rates are almost exactly the same, about 9.5%. But even so, someone has to pay for the increase to that amount. And that person is, of course, the borrower, the house buyer, who now has to pay a record level of 10% interest on his mortgage. And it's likely to get worse. With interest rates still rising, mortgages promise to go higher still, 11%, 12%, perhaps even to that 14%. Mr. Cox, you've heard that. What do you want the government to say to your people, to the building societies, tomorrow when they meet?
Let me say straight away that the position is a very serious one. I'm glad I think you've brought out very clearly there that the building societies are in this difficult position. And I would stress there's nothing further the building societies can do. We work on a very slim margin, so we will be carried along if the interest rate spiral continues with the interest rate spiral.
Now, so what do you want the government to do?
So far I've said the building societies can't do anything more than they're doing at the moment, but there are a lot of avenues open that could be discussed and I'm sure help this situation. Now, the first thing, in my view, is the intense competition for interest rates which is going on in this country. Now, before 1971, this position didn't exist. That was when the old-style bank rate was in operation. In 1971, there was a green paper called Competition and Credit Control, which deliberately threw open free competition on interest rates in this country between banks. And in that paper, there's a now famous Clause 15, which recognized that if the competition on interest rates got too severe, the government might have to step in and impose limits on the deposit rates offered by banks. But I think that time has arrived, and I think that this is one step that the government could do to impose a limit on the deposit rates offered by banks.
Do I understand you to mean then that tomorrow you would like the government to say to your people, we will control deposit rates, control bank lending, basically?
Yes, I would like our people to ask the government and the government to agree to implement Clause 15, which in 1971 they felt there was a need to put it in the Green Paper.
Now, if the government does nothing, what is going to happen? What is going to happen, for instance, in your society and the societies that you know about?
Well, the first thing that will happen in September the 14th, when the Council of the Building Society Association meet to discuss this very serious situation, to stem the outflow of funds, the mortgage rate will, I'm sure, have to go up. Well, I wouldn't like to speculate on what the amount would be. We have to see the figures. We have to study what has been happening.
When Sir Hubert Newton talks about 14%, your colleague, do you think that he's talking in reasonable terms?
No, I don't. I think that is too high. For one reason, we couldn't operate at 14%. We price ourselves out of the market. You've heard one of those couples say that 14% is impossible. Of course it's impossible. It's impossible for him, and it's impossible for all new borrowers.
How high 12%, is that more
I would
reasonable?
think 12% is probably the absolute tops that building society mechanism as it stands at the moment could operate in.
And if still nothing is done, if no direct action is taken, what happens then at that level?
If no direct action is taken, mortgage funds just dry up. We enter a situation, I think, of marking time. But we shall have to keep our investment rate at a level that will prevent money going out to the banks.
Does that mean that if nothing is done, it is inevitably the case that the whole of the house buying situation will be put into limbo?
It looks as if that will happen, yes, because if we haven't got the funds to lend, then house sales will not take place.
Mr. Maudling, can I ask you just quite simply straight away, do you hope that the government will take direct and immediate action to control bank lending and therefore to control the amount of money that mortgage companies have to offer?
Well, he wasn't talking about bank lending, he was talking about bank borrowing, which is an entirely different thing. Of course, the reason why interest rates are so high is because they are very high all over the world, and everyone recognises that. I'm glad that the 14% is discarded, as I think it doesn't make any sense at all. And I think
What does make sense to you?
I think there'll be some increase. But you see, this is a temporary situation. Interest rates in America, in Germany, and everywhere else are very high. They will not stay high. They will go down. What rather worries me is that in the last few years, the rates charged by the building societies have been much more closely aligned than they used to be to the short-term money rates, which fluctuate like this. I think we should find ways and means of keeping the long-term lending rates, what the building societies do, more stable and less influenced by the short-term rates. I think we can also do quite a lot internationally to try and control this general international increase in interest rates. I think there's a lot to be done to give as much priority as possible to the first-time house buyer. When you look at the figures the last 2 years, there has been an enormous extension of first-time house buyer loans from the building society. I don't think people should think that because there are these temporary, very severe difficulties, I quite agree they're very severe, they should not underestimate what the building society movement has been doing, is doing, and will continue to do in the future.
Mr. Cox did raise the question of this famous Clause 15, which gives the government powers to control the amount which banks can offer to people who deposit money with them. Do you think the government should invoke that power and control the bank offering money to people who deposit money with them?
Not in fact what paragraph 15 says, but I think what is said in paragraph 15 does envisage a situation like this, and I think there's a lot to be said to discussing. I hope this is one of the main things will be discussed tomorrow between the government and the building societies.
Would you hope that something along those lines will emerge, so that there will be some kind of controls imposed? Is that to say that the government, in that sense, must take direct and immediate action to control it?
Well, you see, you mustn't confuse the borrowing rate and the lending rate. What matters to people is the rate at which people lend money to them to buy a house, be it a bank or building society. And if you're going to say the banks, they must continue to lend at the same rate but pay less for the money they take in from the public, you'll merely increase the profits of the banks even more.
If I could just come in on that point. So far we've talked about the bank deposit rate being 9.5% and the rate offered by building societies being 9.5%. That's only part of the story. We wouldn't mind if the banks only offered 9.5%. But in fact what is happening, some of the big banks are offering 12, 13, 14% on 1 and 3 month terms for amounts as low as £10,000. Well, now, a lot of investors in building societies have £10,000. In fact, husbands and wives can put £20,000 in. Now, they are moving out from our 9.5% to maybe 12, 13 or 14% in the banks. That's what I feel should be limited.
Briefly, Mr. Maudling, do you think that that should be limited?
I think it's a very interesting point, and I hope it will be discussed thoroughly tomorrow between the societies and the government.
But you wouldn't like to make a judgment on whether you think it ought to be?
No, I'd like to hear both sides of the case before I make a judgment, obviously.
Mr. Crosland, you've been highly critical of the government in recent days. Do you think that it ought to take steps to control the amount of money that banks can offer customers who deposit money with them, and so therefore hopefully reduce the interest rates that mortgage payers eventually have to pay?
No, I think that all this discussion of Clause 15 is absolutely tinkering with the problem. I think it's become absolutely clear now that the volume of building society mortgage lending the availability of mortgages and the cost of mortgages can no longer be allowed to depend on the vagaries of the money market as a whole, what the banks happen to be having as their deposit rate. It can no longer be allowed to depend on whether President Nixon is pursuing a hard money policy or whether Saudi Arabia does or does not want to keep sterling balances in London, or the exact state of the pound and so on. You see, the crisis isn't a new one. A year ago we were facing the opposite crisis, in a way, when the building societies were immensely flush with funds. They increased their lending by 30% in 1971 and 30% in 1972, and all they did in those opposite circumstances was simply to drive up the price of houses. And I think the case then for some sort of stabilization, some government control of lending was irresistible, and I think it's irresistible in the opposite circumstances now. So that I think the government ought to go a great deal further than has been suggested by either Mr. Cox or Mr. Maudling, and say we will now accept the principle that the volume of building society lending will no longer depend on what the building societies in a competitive money market can themselves borrow.
Does that mean, in essence, some kind of government subsidy of house buying?
No, it does not mean this in essence. In essence, this means a stabilization fund. If you'd set a stabilization fund up, let's say, a year ago, when the building societies had so much money that all they were doing was not increasing the number of houses available at all, they were simply driving up the price of houses, they would then have paid their surplus money into a stabilization fund, on which today, when they're extremely scarcer funds, shorter funds, they would have drawn.
Mr. Cox?
That doesn't really solve the problem. The stabilisation fund, if you expect the building societies to contribute funds to it, this can't happen. You quote
well, it can't today. It could have happened a year ago or 2 years ago.
You quote 1972, which is about the only time in the last 15 years that the building societies have had a surplus funds. It just doesn't occur normally. I agree if the government could top up funds from their resources, but this wouldn't be a very popular one. But I think to expect the societies to put money away for a stabilisation fund, it's not going to work, because you say we should have done it last year. If we had siphoned some off, it wouldn't have been anything to help this situation. A stabilisation fund to really help has to be about £1,000 million, £1 billion, really.
Well, can I make two comments on that? First of all, if we had had a stabilisation fund in 71 and 72, the building societies would have been able to put huge sums of money into it. Their lending was going up by 700 million in 1 year, 700 million in another year. If we were to start the fund now, it's perfectly true that you have no surplus money now, I regret to say, and therefore the fund now would have to be started off by the government, making what initially would be a repayable loan to the stabilisation fund. Now, it may be the case, I think none of us know, that over the years the government would have to be a net contributor to this fund, that the building societies wouldn't be able to make their contributions in their flush years up to a sufficient extent.
That does involve the concept of some kind of government's, if it's to control the rate, so to speak, it involves some kind of government subsidy in essence, doesn't it? If they're going to have to top up.
It involves a government contribution to begin with. Now, in the long run, I think it's very hard to say whether we shall need a government contribution. It's possible that in the long run, the amount of money that the building societies can borrow in their normal course of business will not be enough for the degree of mortgage lending that we want, in which case I have no doubts that we must extend the provision of mortgage funds. Local authorities must provide more, and we may have to say that the insurance companies and pension funds also provide a certain amount.
Am I right in thinking, though, Mr. Crosland, there is nothing you can suggest now which would bring down the immediate risk that the people on the film were talking about of their mortgage rates going up to 11, 12%, whatever Mr. Cox thinks it might go to?
Oh, certainly. There are two things. It may be that playing around with Clause 15 would have some short-term effect, though, as I say, I think that's tinkering. But if the government were to announce at this meeting tomorrow that we will now have such a stabilisation fund, started initially by a government contribution to it, this would mean that the building societies wouldn't be in their panic situation now, which is due to the fact that in August they think their receipts are only going to be 50% or less of what they were in July.
Mr. Maudling, would you hope that something like that is decided tomorrow?
Their receipts in August will be less than they were in July. They always are less in August than July. I think you'll find their receipts this August will be the same as they were last August, and possibly more. But, you know, a stabilisation fund, yes, it's a relates to what I was saying earlier about long-term and short-term rates. But what Mr. Crosland is really arguing for is something fairly close to nationalisation of the whole thing. Because if the government's going to control the amount of money, going to say how much money the building society is going to have, it's going to say what rate they're going to charge, they're going to provide them with subsidies, then the government's going to take control over the whole thing. Now, this is always a solution that people propose when they don't know the real practical answer. And nationalising building societies or controlling them by the government wouldn't have two pence of the difference in international money rates. Can't pretend it would.
Mr. Maudling, I suspect a number of people think, and it's been suggested in some quarters too, that really the government is now presiding over a chaos which is beyond its control monetarily.
Well, this is utter rubbish. If you look at the record over the last 2.5 years of the great advance in house ownership, we are at the moment going through an exceedingly difficult period for those people particularly who are buying their houses for the first time or have recently bought their houses. But if you look at the world, you look at interest rates in America, interest rates in Germany, interest rates anywhere else you like to look at, they are higher than ever have been before. And this country can't opt out of it.
That was the point I was trying to make, really, that international forces are so high that national governments, your government in particular, can no longer rule the economic destiny of this country.
Yes, but that's not the same as chaos, the word you use. What I had said before is I think it's a very good thing. More can be done in cooperation, particularly between the European members, the European community, to try and bring interest rates down, and they will fall. These are exceptionally high rates, and they're only temporary. They're linked with the commodity boom and other signs of world inflation.
But I think this raises what is really the fundamental point, and that is whether you think that the housing market in this country and the housing situation in this country should be determined by the behaviour internationally of interest rates. Now, I don't myself. I think that we've all learned under successive governments, including, I may say, my own, that the attempt somehow to use housing as a regulator of the economy is absolutely disastrous. It's disastrous above all because of the effects on the building industry of stop-go and all the rest of it. And therefore I do think now that the case is irresistible for separating the housing market in this country from the effect of international monetary movements. And this really is what the crux of the argument is.
You believe that it's perfectly possible to do that?
Oh, yes, of course it's possible.
This is cloud cuckoo land. He talks about stop-go and so on. In fact, at the moment, the building industry is working in top gear.
Oh, well, no, we've had housing figures, after all, from the government only yesterday.
The trouble at the moment is shortage of labour materials, nothing else, not shortage of finance.
We show a decline in house building starts.
There have been a number of reports, Mr. Maudling, suggesting that house building is in fact about to have its worst year since 1963.
Yeah,
well, if you try and get people to do work on house building or house maintenance or house improvement, you will find there was a shortage of plasterers, of carpenters, of bricklayers and of materials. The limiting factor on construction in this country at the present moment is not finances, materials and manpower.
No, but why is this? So it's a question which is, well, it's very, very relevant. Part of the reason for this is that between 68 and 70, I think Mr. Cox will agree here, we had something approaching a mortgage famine. At any rate, we had a much more scarcity of mortgages than we have now. In consequence, we had a slump in the building industry. Whenever you have a slump, the skilled men go out, the apprentices don't come in, small firms go bankrupt, and when you get the boom period arising, the industry can't cope with it.
Can I just ask very briefly, and we've got into some detail, whether or not any of you can offer any hope to the people that we saw on the film, whether in the next few weeks their mortgage rates can be prevented from going up or not? Mr. Cox, very briefly, please.
I think the odds are that they will go up next month. They could be prevented because the government could ease the tax that the building societies pay. We pay £300 million income tax to the government. They could cut that, which would enable us to cut the mortgage rates.
But basically they will go up?
Yes.
Mr. Maudling, will they go up in the next few weeks?
I don't know, the societies must say that. But you said the next few weeks. People buy their houses over a period of many years. These are exceptionally high rates. I believe myself a very short period. I'm sure if the government can help, they'd be delighted to do so. I hope the building societies will explain to them how to do it.
Briefly, Mr. Crosland, any hope?
Briefly, it depends entirely on what the government say tomorrow to the building societies, which, alas, is no responsibility of mine.
Not very optimistic from anyone, I'm afraid. That's all we've got time for. We've been talking, of course, about those who earn £50 a week or more. Good night from this week.